Hello everyone, welcome back to Forex Black Box channel for Forex trading and other um, trading facilities like future, stock. All these will come later on, hopefully in future. Welcome back, guys. Sorry I didn't do any update for a week. I've been quite busy with my family. You all know that coronavirus is quite strong across. Everything is okay on my side. Everything is good and healthy. We have a nice hot weather these days, which is great. The less traffic in the air, the more clear air. So we have less traffic in the air now. We have sunshine and blue sky and beautiful air, fresh air coming through. So yeah, coronavirus got its bad way and a good way. So the good way is we have less people traveling, less people producing CO2s and all this crap, and that's why we have a fresh air coming in. Hopefully, will heal most of us as a human being. First thing first, guys, regard Forex. Forex is carrying very high level of risk. If you're not sure what you're doing, you should stop trading and reconsider to understand what is money management and how you trade each position is very important, especially at this time. Everything is moving fast, and do not hold in a loser. Do not hold in a losing trade. If his trade is going in one direction, you know that's going to continue. Even if you show your momentum back up, that means it's going to just momentum to continue the trend. So do not assume or do not think that's you're right. You have to follow the right market's footsteps. So be careful at this, guys. Yeah, very important. Okay, let's quickly. I would like to make this video very quick and brief. First thing first, we see that coronavirus is cases increased in US is about half a million now. I'm not sure. Let me just yeah, we close to half a million. Death is about 17,836 at this time. It's Friday, 6:30 p.m. London time, 10th of March. Sorry, 10th of April. Yeah, April. The time running very quick, guys. Sorry, 10th of April, 2020, and we are now we're closing to half a million infection in US alone. Total is 1,630,000 cases. The deaths reported 89. We're close to 100 very soon. Probably by the weekend, we're gonna see this 100 mark is been break out of it. So it's very sad, very sad. The thing is, what I realized the virus come from here. According to the investigators here, the virus come from US, sorry, come from China, and start to develop across the globe. As you can see, is only affecting the majority of the north of the Earth itself, which are the cold places. The old people live there. The, they got less immune system, so on and so forth. The lower side of the Earth here, you can see, is a hot area. That's why we have so much. They have more immune system because the sunshine and all the stuff. So there's a lot to add to the topic, but we'll just stick to it. That's where we are here. I'm in UK here, and this is Europe infected. Majority of the big countries basically infected, and US itself. But the very funny thing I can see here, China has been for a while now. It's been flat curved. There's no any more cases. There's no any more death, and the recovery it's already equal to the cases. And it's really it doesn't make sense to me that that's the source of the disease itself, and they are okay now. They're open for business. That's a good news, and sometimes I don't know what's going on. If they have a cure, they should share it with the rest of the globe because they are the one that basically infect everybody because that's the source, that's the ground zero. I don't know. I cannot talk about that much because I don't want to be being flagged by talking about major China or US or whatever. I don't care about this. What the most important thing is to know the bigger picture where we are in here. So um, that's all what I have to say about the situation now. As you can see, basically that's the hub, that's the trading hub of US is a trading hub, global trading hub, of course, between China and Europe and US. That's basically infected. As you can see, they don't have much of information how many people are going to die because they have like half a million, almost half a million infection. Mm, The odd, I don't know, maybe 50% of them they're gonna die. I don't know if they didn't find a cure yet or vaccine. So how can take that in the trade day to day? You have to keep monitoring the situation, and you have to keep your eye on the news. Where are the US now from the global pandemic, and where what we do, what they doing, and what Europe doing? Basically, UK itself, we are almost closing to 8,000 deaths and almost 1,000 every single day. Now there's about 980. By this time, people died today, and it's really scary for a lot of people, especially not especially. I mean, maybe especially the old people in the country that get more infected by this virus because their immune system is quite old and they don't have enough immune system to protect them against this stuff. We are at the lockdown at the moment for a few weeks now, 6 weeks, maybe seven. I think 7 weeks now, and I think this is going to continue uh, to be longer than they expected. So we're talking about 3 to 6 months lockdown probably. We're already closing to 3 weeks, 3 months now, I think. And yeah, less than 3 months. Sorry, guys, less than 3 months, and still we are have a nice hot weather today. Hopefully that is going to continue trending, and we're going to defeat this virus. But this virus is going to stay with us for another year, I believe, because it's already destroyed the economy, and any small business to medium business basically the way it's going to be bankrupt by the time that virus start to make stop making ground basically. So the virus is kind of trending now, and when we see the curve start to the peak of the virus, which is the highest number of people infected and died at the same time, then we will see the virus start to lose momentum back, just like the market is a chart basically, chart analyzing the chart. So yeah, that's the case now. That's why we have to keep an eye on. Let's quickly look at the market itself. Today is Friday. The market is still open in Forex, but is not open on other stock and future and options. They're not open because today is bank holidays, Easter bank holidays. So the market will be open Monday, I think. Monday, I'm not sure. But the market goes 3 days off. So today and the weekend, 3 days. So Monday, probably market come back to normal. As you can see that we can look on the weekly. Have a look on the weekly. It looks like it's bulling back up. A lot of stocks is just coming back up, but I still don't believe that is the bottom yet, in my opinion. I think that's just the only pullback because of Easter time and all the stuff. People buy in stock. They just try to reinvest again because they probably lost a lot of money, or other people get out of their short before Easter time, and that's why we see the market pulled back basically. And yeah, just keep an eye on the market. S&P 500, that's the 500 stock inside it, and you will know if S&P 500 going down, that's mean the stock going down. You can trade that against the currencies like Aussie, yen, and gold. Basically, these three you can play between these three. We'll discuss that later on. Forex itself, on the daily view here, we see Bound is quite strong, Aussie is quite strong. The Aussie, the reason being strong because of the stock is pulling back up. I think his stock is pulled back, SP 500 pull back up to 50% and it's stalled there. Basically, we close at the 50% exactly by the paper, I think. I will show you later on in the chart. Pound is quite strong a little bit more because Pound really dropped to nowhere ground, coming back 50%, and we stalled here now at this level. I'm talking about daily here, Pound USD cable. I'll show you the chart later. I did trade the short side. I didn't really take much of as expected. There was 1700 pips move. I did I think about 950 at this move down. Then the move back up, I took some trade as well up to 50% and I exit. And I'm trying to short it now small so I can test that 50% of the pullback. Wave 2, basically wave 3, if you know what Elliott wave means. Um, okay, as I promised, I would like to keep that video short and sweet. That's the news for next week. Okay, let's just get this correct. Okay, so Tuesday, Monday is bank holidays. As you can see, there's nothing there. So I don't believe it's a bank holidays. I'm not sure. if it's Easter. Yeah, Easter. Yeah, Monday we just got a few minor um, low impact news. And I'm just looking at the medium and the high impact news. It looks like we're dominated by CAD. The more here to do with China and Aussie. So watch out for Aussie on Tuesday. Monday night time, you watch out for it if you're a London trader. Tuesday, Wednesday, you got US and CAD dominating the whole day. So expecting oil and S&P 500 to move, and dollar and yen. So four of those are going to move at Tuesday is on Wednesday because there isn't been a lot of high impact news, but it's going to affect the currencies market and the future. Aussie on Thursday we have a high impact news at 2:30 a.m., which is Asia session. Unemployment rate I think is going to be high. It's going to be increasing probably because you know that coronavirus is affecting the whole world. People out of their businesses and they don't employ any more people. It's pretty much obvious, so watch out for that. If you long Aussie, just be careful at Asia nighttime. Probably is going to spike down if you're long. Talk about 200 to 300 pips, whatever it takes. But I think there's going to be a huge number people out of jobs and they claim benefit from the government. What else? US, as you can see, pound very light. We don't have anything to do with pound only at 9:30 a.m. as usual. There's not really big deal here. And China again at the end of the week. So we've got China beginning of the week and end of the week. High impact two news. So watch out for this too. GDP quarter per year, quarter and every year quarter. So we already April, so that's the first quarter, of course. So watch out for that. I think it's going to be a negative uh, of the last month since they were closing for a business. No, there's no business going on, so I think the GDP will be down move. That's going to affect Aussie as well. So watch out for that. I think Aussie is going to go down anyway because I think Aussie is going to be affected by its own news and middle of the week and at the end of the week. So we've got three. Aussie is probably going to be the biggest mover over the week coming next week, and it's going to be yen as well. Yen is going to be the opposite of Aussie. So who's trading yen, dollar? So you need to follow the chain reaction. If you have any trade between point A all the way to the point Z of the chain reaction of this news, you'll probably know what to do with your trade. All right, so that's the indexes. Quick look at it. Basically bound at the last time we talked about it, it dropped from here, coming back, started to do waves. Since it started to show momentum here, we'll break out of here, we'll break out of here. Looks a strong momentum back up. We engulfed this big candle. We break above it and we close above it. That's the indication of continuation back up. We're coming back to retest the moving average and we can isolate here now. My expectation is we're going to see one leg down to this level. We're going to see one leg down here. Let me just clear that. One leg here, probably come back up again and try to do double top a little bit higher, probably around this level, which will be your indication whether or not we're going to challenge this high. Overall, pound halfway, 50% of cable between US and pound. If you can see US kind of like come to 50%, hold it well, coming back up. It couldn't continue the 50% all the way up here, maybe below 50%, and we're coming back to do double bottom. If that's the case, if that confirmed a successful double bottom, then we will be coming back up. And if you look that, it's quite famous pattern. They call it butterfly, whatever they call it. This is going to be about 88%, and we're probably going to see a drop again, 50%, and probably come back up again if you want to. But we'll see. It's too early to say, or it's too early to assume. You never assume, just review the possibility, all your options. Basically, is a trend line here. We're below the trend line again and we're looking for this level. So we have one area to check here. One, two. Let me do that. I'll do it the right way. We have one here, double bottom. See whether or not it's going to break this one. Spike back up, retest, and continue back down. Then we'll be challenging the bottoms. Or it's going to hold that 50% firmly, and we will see. There's some news for US is coming, so probably that's going to be the case to hold it up. And yen looking like he wanted to go down, almost double tops. We'll break out of this level, come back, retest it, and we're coming back down. If you see that pattern here, Here you go, channel, break out of the channel, come back, retest it, and we strongly going down. And I believe that is going to be similar to something similar to this. Come back, moving average, and continue back down. Okay, euro is quite flat. Really, I don't really uh, take in consideration to trade euro at all. But maybe if some other currency is quite strong, like CAD, I can create. Sorry, like Aussie, I can trade against euro, but it's not that attractive. You can trade Aussie against dollar, against pound. Pound is a little bit sideways here. It's not moving anywhere, but euro is looking like it's sliding slowly, grinding lower, and that's where you can take advantage of that. Um, New Zealand is following Aussie, but looks like Aussie is more stronger. Aussie basically break out of this swing high, the last swing high. Probably he did one, two, three. We're gonna see small waves inside, four, five, then we'll probably come back down. Elliott waves, if you know what I'm talking about. It's very simple, but you need to follow the rules. We look like we broke out of this level here. We broke above it, and we kind of holding, but look like Aussie is more stronger than New Zealand at this point. My expectation is we're going to do zigzag, full pullback up to 50%, and probably come back down. Swiss, as we talked about this Swiss, that's the top. It doesn't look like we want to go back anymore. We close below it very nicely. We can isolate below the moving average, and if you can see that we are doing exactly the same thing as euro. So basically, these two correlated currencies that are looking very similar in so many ways, and they are 7.64. This is 7.0124. So it's very quite easy to spot it that they're moving almost identical. So on your blacklist, you should not trade your Swiss and euro, which should no one do after the crash. So in my opinion, that they're moving together now. So stay away from trading these two together. We talked about Aussie CAD. We see the news of oil is quite ups and downs. At the moment, we have two tops here. If you move the make a trend line, and the trend line here, we kind of break out of that triangle. We're coming back inside it now, and we kind of hold. Let's see if that's going to be a failure to break lower, and we'll go back up to challenge this high, or is going to just continue back up here because we see a big wave here coming back. Retest, we test this level, looks great. We're coming back up, we retesting this level. So my expectation is to continue back up, see some feeding momentum, and if we feed away, then probably we'll continue back up. Watch out for that. Okay, jump in here. That's S&P 500. So I have the 20 moving average and VWAP. It's inside the daily candles. If you're wondering what this yellow line is, basically we're at the 50%. We closed right at it. We just broke above it and we close at it because there's no anyone want to leave any money on the market when the market off for 3 days or more. Yeah. So Friday and the weekend, and I believe Monday is gonna open. I'm not sure if it's Monday. I need to check that, guys. You should check as well. You need to keep an eye on it because that's the if that moves, everything else around the market will move with it because that's inside a 500 stock, and those stocks there will be money flying inside. In order to buy any stock, you need to change your currency to the right currency, to dollars. So that's going to affect the forex market. So forex market moving behind the stock. If there's no stock trading, there's no forex market. It's not going to move like today. If you notice today, nothing is really moving. Like cable, for example. Look, the day is today here. You see, so far we didn't do much. It's like 5 minute candle here. We didn't really do a lot. I will analyze it later on. So basically, our 50%. What I expect from here, as I told you, that trend line is broken. So what happened here, guys? If you look here closer, that's the first one. That's one, two, and we'll get the third one. We'll try to come back. We're about 50, more than 50%, more or less, of this move. We test it and we break out of this high. Looks like we're trending up, and we break out of the 38 Fibonacci and we hit the 50. My expectation is we'll see a small wave, and we're going to do another wave here, and we'll continue back up, maybe the 61%. Then we will be watching for this level very well, just before the 3000 area. I don't think we're going to hit the 3000, maybe, but Don't take it for granted because we don't have any solid information about what's happening with coronavirus, if they're working on a cure or I don't know what's going on exactly. So we're still in the same situation as 2 weeks ago, but the extra thing is a lot of people get infected and a lot of people died. So the stock is just bouncing up to hit the 50%. Majority of the buy and sell, they kind of agree on the 50%. When it comes to 50%, if I'm a seller, I'll be exiting here. If I'm a buyer, sorry, if I'm a buyer, I'll be exiting here. If I'm a seller, and I keep selling here, 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 my 50% it will be my mid range. For example, if I come to sell, if I'm a buyer, for example, I will give you one strategy. If I'm a long-term buyer and a big hedge fund, I will be buying every candle close. I'll be buying all this, buying here, buying here. Yeah, I'll buy here, I'll buy here, I'll buy here, and I'll buy here. So basically, I break even all of them. Okay, so from this area to this area, we kind of like you increase your sizes down here and you exit with a profit. You break the other with a break even. You didn't lose money, but you need tons of money to do this kind of strategy. I don't advise you as an individual to do it by yourself. You need tons of money, tons of free time, and so much to analyze the market very well because they don't trade one market, they trade tons of market like maybe 25 that portfolio full of other market and the hedging. There's a lot of strategy. The market is full of strategy, but is your job is to tune with one of this strategy and you keep repeating the strategy over and over and over until you become your second nature, like something like driving a car. You know how to drive the car now. You don't even think about it. You just jump in the car, you keep going. You know the traffic light. You know when to stop, when the emergency. Everything is like that. You know. So the same thing, you need to tune with one of this strategy, whatever the one is going to suit you, your money and time, and to be happy and to be depressed and sad because you're losing money or anything like that. You need to be happy in your trading because this is a long term. It's not going to happen only once or twice. Also, guys, you always, 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 you have to expect the worst. You know, you always keep the worst scenario is going to happen. So you prepare. Do not freeze. Do not freeze. If the you expecting the worst is going to happen as it's showing you the stages of that worst is going to go against you big, you exit your trade, go with the trend because we're not assuming that's going to go here or there. We're following the trend. If the trend is moving up and breaking the previous candles here, break, break, yeah, which is break here. If it's going down, come back up again. That's your strategy. That's daily. If you trade on the daily, pretty much you see this in the session, you put your buyer above this close, and you get in the market. The next day is green, great, I stay in the market. The following day is green, okay. If you come here, okay, where we are from the bigger picture, okay, we have a break down here. We come down here 50%. My expectation is some pullback is going to happen. I exit most of my position, and if I see it coming down, it give you more opportunity to buy. I buy here. I buy here. You see it coming back up again. If it's coming back down again, I guess it's a sideways. So stay with it. Stay with it until it's breaking out. Okay, sideways. Close. Buy here, sell, and close here. Buy here, sell here, buy here, sell here. If you break out of the range, you exit your position, or you can stay with it because much probability is coming back down again. We know where. We don't have any cure. But ultimately, you should not leave any trade below in the danger zone here because if they come up with a cure, possibly we're not going to see that zone again. Yeah, it's going to keep going up, come back to the highs again. So watch out for that. It's very important to understand what you're doing. Do not just hope or assume that is going to go your direction. If you start to show momentum against you, save yourself the rest of your trading stop loss, exit, reassess, re-enter again the market. Okay? Do not lose money in this market. The market will move fast and quick, especially coronavirus and all this stuff going around. Okay, moving on quickly, guys. Here you go. Oil. Saudi, they were speaking about meeting with Russia and Trump and all the stuff, and we see this candle here, big spike up, and that's why we have the spike. The following day we go a little bit higher, and we kind of flag now, That looks for to me as that's a bear flag. You see the momentum. If you draw your line correctly, will come back all the way up with failure to break higher. What do you think after the failure? Come back inside, they're gonna take it down. So whoever pushed the market down, his expectation is to do a major move. So probably up to this level, we're coming back for it, maybe 25, $24 the barrel. Ultimately, I mean, it's my expectation of oil to be $10 very soon, maybe lower than $10. Remember that when I talked about the major move, the very next day, open here, the new week, open here and see pullback and drop, pullback, and we're gonna drop again. We're gonna drop big this time. If you look to the bigger picture, investor normally they go on a breakout and they keep loading. They're looking for a major move. Here we go. We moved here, we're pulling back, and I'm looking for a major move. So that's my major move I'm looking for. Pull back, major move. Very, very easy. With one, with two, with three, with four. With four is always like that, and with five is going to be down. So my expectation is $10 is coming into play very, very soon. Very simple. You can see wave one, wave two, wave three, wave four, sideways, zigzag, as you can see, is the longest wave, and our expectation of wave five is going to be maybe 50% of wave 3 is going to be smaller than wave 3. That's your wave 3, wave 4, wave 5, probably around here, about $10. That's what I'm looking for. Remember, I said that here first. It's not funny, but oil is going to go down because there's no demand. The supply is already overloaded. They have too much oil. There is no one flying. There is no one ordering big orders except the food, but the rest of the industry they don't order anymore. The driver that don't use as much diesel as they used to or petrol as they used to. No fly. They don't use a fuel. Think about it. It's very simple. It's very simple. So if there's no one, no demand, there's no market. Okay, the market is going to be always go down. They keep lowering the price. They're attracting the buyers. Guys, is a discount buy. Is a discount buy. Is a $10 buy. If you come to discount $10, people will start to buy. Especially crude oil, you can store it. You can store it on water. You can put it on ships, second-hand, redundant ships, and they can load it with crude oil and you leave it on shore. There's so many ways you can do that. So my expectation is I'm looking. That's the wave four. Looks like it. A very very clear indication that's was wave four for the breakout, and we'll continue for wave five, which is going to be $10. Okay, moving on. Gold. Look at that gold. Very, very volatile. Very, very, very volatile. If you see that period of time compared to this period of time, this is like a little brother, this is a big brother. Look at the previous period of time, medium, small, large. Where do you think we're going to go from here? We could have one, two, three tops, and after that we'll see pullback from here. I don't see gold to go up now, but the reason being it didn't show when S&P 500 is going down, gold was going down with it. Some people talked about margin call. People sold their positions so they can cover their equity positions. I don't know what the story is. The market is going down. You go with it. Buy the rumor, sell the fact. Okay, that's coming back up again. We hit more than 50% pullback. So what happened here, guys? We have that momentum up, pullback before 50% and coming back as strong. So what we have here, we have a wave, two, three, four. Probably four is going to be like that. Five, not sure where it's going to go. I recommend that you keep your risk low and trade on a lower time frame. Take your profit quickly. Do not stick around. Keep your stop loss active. Even if it's going against you and it start to go against you, you probably should exit before even hit your stop loss. You save yourself because you are not sure. You're not 100%. There's nothing in this market is 100%. If someone tell you gold is going to go up, don't take it for granted. You need to know to see there's evidence is going up. There's a buyer in the market. There's breaking out to low time frame, all the way from 1 minute all the way up to 1 hour. Then that's your intraday. That's you are in the right direction. Do not keep loading to a loser. Okay, guys, it's very important. So we almost touching the highs here on Friday. Today is Friday. So let's see what's going to happen here. Probably going to open some gap here. in Easter. I'm not sure what's going to happen. If S&P 500 open low, probably going to see gold up there, maybe 17 and a half. I'm still in $2,000 the mark is going to come in play, but we will see what's going to happen here now, because if S&P 500 try to push back up a little bit more, and gold should go down. As you can see, that S&P 500 going up and gold going up with it. There's no correlation anymore. They're kind of different now. They have a different trading strategy. They don't match anymore. So if you remember, if you watch my videos before, I said that if you trade in S&P 500 or stock or whatever the case, when you want to take risk off, you go to gold, same amount. Okay. In the middle here is your profit filter. So if you make money, you take the profit out and you push the rest of your money in gold and yen. And if you market come back to risk on, you sell your position, you take your profit, and you push it back to the stock. That's basically a cycle of every hedge fund, every trader. If they do stock and they wanna save haven asset, they do this all the time. But uh, this strategy is broken for a few weeks now. You can see that is not doing as it's supposed to do, as I did say before. Now, what that mean? That's mean they jump to cash instead. So that's if that's the stock, cash, and gold. So instead of going to gold, no, they take the money out of the gold, they go to cash because they need the cash the most now. Every client, the hedge funds, they're asking for cash. Liquidate all my positions. I want to cash out. I need money now. It's a hard time to trade. I don't want to risk anything. So most of the money going flying to cash, and that's why a dollar get increased in demand because they run out of cash. Gold, as you can see, dropped down, and that probably big player. They taking the play from down here. Maybe they have readjusted their thinking and they want to go back again to play the same game. However, we seen that S&P 500 going up and gold going up as well. So wait for it to see which one is going to drop first. Probably S&P 500 is going to drop first because that's the safe haven is gold is going to continue back up. So my expectation is probably about 1800, probably next week. Then we will start to isolate to try to break the 2K. Okay, too much on gold. Let's move on, guys. Bitcoin quickly. I talked a lot about Bitcoin. I'm not trading Bitcoin. I'm only analyze it for you guys. We see this gap here. We didn't really close the gap. We stayed flat here. We stayed here. We just keep just shifting up slowly. The momentum is slow, and if that look like a bear trend, we already broke below this swing low. We're retesting it now. We're above it. But do not long here, guys. I recommend for you do not long here. The reason being that wave 1, 2, wave 3, wave 4 need to stay out of wave 2. Sorry, wave 1. No, never touch wave 1. So as long as it doesn't come up to that yellow line, we're still in a bear move. We're still looking for wave 5. That could be only wave 4, wave 5 down here. So it's up to you. If you want a long inside the day. Do not leave anything on the table. Do not leave anything on the table. Let me just clear this out. As you can see very clearly. 1, 2, 3, 4, 5, and wave 2. The small waves inside. That's what we have here. And that's wave 3. Break momentum is strongest. Wave 3 is the biggest. Wave 4, we're still below the wave 1 territory. Then we're looking for wave 5. If it's become a failure, it's going to be a short-handed one. So it's not going to break low. If it's become a failure, wave 5, my expectation look for small waves to come back up again and try to go back up. Until then, I don't recommend it to long it because as you can see, there's no activity going on in the market and we're going down already. We give all the so 1, 2, 3, 4, 5 days where we start here on Monday and we come back to it. So there's a rejection on the daily. If I look on the weekly, sorry, you see that on the weekly itself is look like rejected. Even in the weekly is looking bearish, guys. Come on, look at that. So look at that weekly looking bearish. We broke below this week. We'll come back retesting, and we keep going since. We're coming back 50% of the if the whole move. If I look here, come back down, come back up, about 50%. We'll come back down for a major move on a weekly view. It can take several weeks to complete, but that looks very much as a bear market. Every time come back up, drop, every time come back up, drop weekly. Okay, we didn't go anywhere for 4 weeks. The whole months, full months, 4 weeks, we're still inside the same area. We didn't really do new ground. So that's only per flag on a weekly. So my expectation is going to be a major move of this move, exactly the same size or more or less. I always take profit before the major move complete. I don't care. I don't stick around. As long as I make money, that's most important. Um, okay, jump quickly. Dollar index. So dollar index come back down, come back up, come back down. Volatility is very strong at that red candle. We reacted to the 50% and that red candle where it stopped, um, break out of it, and we'll come back to it. We didn't break below it. We stayed above it, come back up. What that give me? 50% of this area, 50% of this area tested, and we now at the 50% of this move. So until this cycle break, you have to recalculate again everything. Okay, that's one of the secrets of the trading I always use. Um, you always calculate where we are. We break higher, come back 50%. We test this level, and we respect it. We're coming back up. We test this level and we respect it. So what happened here, guys? Buyer defended this level. Seller defended the 50% of this level, and let's see if the buyer is going to defend the 50% of this move or they're going to let it go. If they let it go, the cycle is broken and we will continue to recalculate. Come back down, come back up 50%, and we'll continue back down. Probably double bottom, then we'll see what's going to happen from there. Okay, just a quick experience way to identify a positive trade. Exactly same thing happened here with dollar yen. Sorry, euro dollar. 50% respected, come back 50% respected, and come back here with the 50% now, and we'll see what's going to happen. If it's going to be respected, my expectation is going to break below this one, and we'll try to break this area. Then we'll have a double bottom, and we'll restart to looking for another opportunity. Start recalculating, you know. So next, dollar yen. It does react similar way on a daily. If you don't see that pattern I'm talking about, you always go to a different time frame until your mind sync with the chart and you can see visible places you can buy and sell from. Okay, market come back up, come back down, almost about 50% respected, come back up 50% respected, and we're coming back down. We couldn't really, maybe we touched the 50% and we close the week on here. So the next week you're gonna start partitioning here and looking for another opportunity, whether it's gonna start to go back up or down. If you're coming back up, we started looking at these highs at the 88%, 61% Fibonacci. If you start going lower from this from next week, you will be starting targeting the 61%, the 88% before the bottom. Very simple, guys. As you can see, you close here and you're waiting for what's going to happen next. Either sideways, yeah, or it's going to break and continue trending. High highs, high lows, then that's my target. If it starts trending low, lower lows, lower highs, that could be my first target, that could be my second target, third target, and if you keep going, that could be my ultimate target until we break a new ground, then we will see from there. uh, Here bound cable is quite difficult to trade for you guys. It doesn't suit this strategy, but in a lower time frame it will. On a daily, you can see that will come back strong down, strong up. I did benefit from these two moves itself, and now is kind of sideways. My expectation is going to do that for a while. The the reason being is if you look back in time, you can see that the cable is always does that all the time. Can isolate, slowly going down to the direction of the market. So what I wanted to see is next week, if I'm gonna short it, I actually shorted just a quick scalp yesterday and I exit my positions, but I am looking for failure breakout and we'll start to break lower. Okay, my expectation is I think we're gonna have a failure breakout, come back testing 50%, and if it's become continuation to go down, then I will be waiting for pullback to test the 50% and we'll go back lower. Ultimately, we'll be testing the 50% of this move, and from there we'll see whether or not they're going to defend it. If the bulls want to defend this level, we're going to see a strong momentum from 5 minutes up to 1 hour. Then you take it up to the 4 hours and I start to buy on pullbacks. So that will be my first target. Midway second target of this move, and the last target will be this one. If he start to go lower, that will be my first target. That could be my second target, and that will be the ultimate target until we see more momentum down. Not sure, no one knows where the market is going to go. At least you have some attitude to trade the market with. That's very important to have that easy, as you know how to cook food or how to drive or how to make coffee. Very, very easy, Not very easy, guys, but it's easy to adopt this behavior. Okay. Bound euro pound. So you can see the momentum up, come back 50%. I talked about it. See whether or not it's gonna defend it. The buyer will really have a successful breakout. More than two candles, a successful breakout. We'll continue the momentum up. We stopped at a new highs, and from new highs, the buyer exit the position. Seller take opportunity to jump in the market. As you can see, wave two, wave three, wave four, maybe wave five, a small one. Then we'll come back up again to test that 50%, which is a 93 level of this move. Let me just clear the chart. What I'm looking for now, I'm looking for this to be defended, rotate back up, and if it become a failure, seller defend this level, then I will be shorting it. That's what I'm looking for. That's my stop. That's my take off location to target this level. When I come here, I will exit my position and I will waiting for a failure to break higher. Then we'll probably continue back down to do a measure move. Do like that, coming back, measure move. This will be equal this. Okay, pound yen. Pound is going to be following pound itself. Yen is going to be weak, so my expectation pound yen could go back up a little bit more, but still we still need to look for a failure. You always be looking for a failure to break out. So this level is quite good to monitor. The yesterday, Thursday, you don't see that much of momentum. Let me get the little bit bigger. See this level here? We break out of it, we close above it, but we didn't really go far. It's very, very, very easy looking failure. We broke all the way down, maybe the quarter of the candle itself. So my expectation today, we're going to close it small. Probably next week we see some momentum down to retest this 50%, and we overall in a sideways. So I would like to see a strong momentum down, one big giant red candle to go down, break below, retest, and we'll continue back down, test that red candle here, then probably we'll retest that big giant red candle again in the future if we see that next week to break about out of this range. If this candle today go inside the range, there's going to be a failure breakout and the momentum down is going to continue to that red candle range. Okay, that's my opinion. I think that's going to happen. There's no any buyer who will accept that price at this point. That will be waiting for a discount, and buy and sell and normally agree on the 50%. That's where they agree whether or not to defend the level or let it go. Okay, if the bulls strong, they're going to defend that level. Bears, they will understand, they'll get out of the way, and they will join the crowd. And they come to 50%, then they'll redo again, try to fight over whether or not to defend that level or not. Okay. Aussie, pound Aussie is very choppy, as you can see, but the last few days, you can see the whole week is going down nicely because S&P 500 is going back up and Aussie has been benefit out of it. So if you following the market, if the breakout from here up to until now, you probably made 700 pips. You open and you close at the end of the day. If you open Friday, Monday, you close today, you make 700 pips. Very, very simple trade because you see the S&P 500 look like you wanted to come back 50% to retest. Then you take advantage of it. If you don't trade future or a stock, you could trade Forex, which is the only pair you can trade with the trend of S&P 500 is Aussie. Okay. Same goes here, guys. They follow each other. They are twins. They're always moving, but not exactly. But They're almost moving in the direction of the trend. Pull back, continuation back down. I think that's what we're going to be looking for. A failure to break below this level. As you can see, we tested already 50% of this move coming back. Let's see if we're going to see a rotation next week. We see a candle to break above this level. That's going to be your trigger. But wait for it to be successful closing up. Wait for the next day pullback. You can buy here and leave your stop loss below there, and we will see for another leg up. Okay. CAD, watch out for oil. That's the thing. CAD was strong a little bit half of the week. So we'll come back strong and we'll lose momentum before the week is over. We are about 50% of this move. We see that spikes 1, 2, 3. Probably going to see a major move 1, 2, 3. A, B, C. Okay. So my expectation by CAD to be strong. Oil will be following up with CAD. That's your target because we see the price action showing that's a rejection or a failure. They are both the same really. As long as the price doesn't stay there, seller, as soon as the price come up here, they sell it immediately, and the buyer, they run away, they join the crowd, and they start selling more. But who hold in the market? The buyer from here. Sooner or later, we'll see a big red candle, and that's indicating that the seller sorry, the buyer give up. They exit the position. So if by next week we try to go below this candle, we're gonna see a big momentum down because the buyer they give up, they exit the position basically. Okay, I yeah, let's just do that quickly. Still at the 50%, more than 50%. Wow, we did about exactly like cable on this move. Should do that for the sake of pound. We're above the 50%, 61%. Looks like sideways on a daily. So we'll be kind of sideways. Looks like we'll break out here. It was a failure breakout. And we're coming back now and we're probably going to see another wave up and down until we see a big giant candle, either red or green. If it does, we will follow that direction of that candle because that's when the other side of the trade they give up. Okay. Okay, guys, thanks very much. I'm gonna stop it here. If you are new to my channel, please subscribe, like, and leave a comment, and join the Telegram group so I can post sometime any voice message, trade ideas, and stuff like that. Okay, guys, thank you very much. Have a beautiful weekend. Look after yourself and your health and your family. Take care. Thanks. Bye bye.